Hello, my name is Steve Scott. I'm Managing General Partner, founder in 1997 of SIA. The purpose for today's presentation is to give you an introduction to our company, provide you a little brief on our background and our experience in portfolio management, and to explain briefly the 6 products that we are going to release for public consumption today. I'm joined on my right by my longtime colleague and co-portfolio manager for the last 27 years of the SAM portfolios and partner of SIA. The story of our management methodology and its approach really is the continuation story that really started back in the early 1970s with Equitable, when we first worked on the very first project of an asset overlay in the marketplace. Purely institutional, it was for large corporate pension funds. I saw huge potential in the retail marketplace for it, but the systems and technology hadn't been developed yet. Later I left and started my own firm and became fairly well visible and known nationally. And it was at that time I was approached by an old friend who happened to be president and CEO of a very large California Fortune 500 company, Great Western Financial. And he asked me, he said, "Steve, we're going to build a very large presence in the marketplace with a financial service division that would include mutual funds, financial planners, and the administration operations. And we'd like to have you build the portfolio management and research discipline that's necessary to drive this whole thing and the work you've been doing on over the years." So as I listened, it got to be a bit more appealing, and the budgets ended up being unlimited. I had total freedom, architectural design freedom and policy freedom, and so that's essentially where it got started. We are going to let a lot of these blanks get filled in by you with the articles and stories that are chronicled about our journey. They're on the company website as well as our investment advisory website for you to read. So you can fill in the blanks there that were published over the years. But he asked me to build this. That's exactly what we did. We built a complex that was unique. It embodied all the concepts that we were working on at the time, which was a 2-tier system of portfolio management, the first tier being the individual value additive portfolio management, the second tier being the asset overlay. And challenging, but nonetheless it had huge opportunity. And my first hire obviously was a critical one, and it was a big project. And I needed somebody that would work long hours, somebody that was a stickler for detail, somebody who had portfolio management background. And that's, I'm pleased to report, my colleague and friend of 27 years, Patrick Hook, continues to pursue discovery like it was day one. So the Sierra Trust Funds were a grand slam. There wasn't any question about it by any measure. We had a multi-manager tier of portfolio managers at the individual asset class level, all institutional. And secondly, we retained the overlay option on the funds and created 5 investment strategies and used the whole family accordingly. So we improved the math, and especially as CAP-M was refuted, we had to find the next generation that worked in the quantitative area. And so what we have today is kind of a fusion between classical, traditional portfolio management and the quantitative disciplines merged together. Anyway, it set several records. The Sierra Trust Funds did. We were very proud of that story. Fastest mutual fund ever to reach $1 billion in assets under management, the first overlay portfolio management associated with a mutual fund. And then we filed internally, rather than having the allocation be a separate service, we filed internally a single fund that used all the sub-funds, and the allocation service was internalized, and we created 6 funds that way. We were the first ever to do that. Today they go by different names, target maturity funds, lifestyle funds. There's a whole plethora of names that people have named them. And finally, we were the fastest growing mutual fund in the history of the industry. Went from 0 assets to 26 billion in 7 years. Became Barron's top fund family of the year. Well, in 1997, not to be outdone by prosperity, Great Western decided they wanted to spin this off into a separate company. And the management came, including myself and Patrick and other leadership, were a natural acquisition. We were ready, willing, and able to acquire the firm, which we proceeded to do. In the process of this transaction, Great Western was the target of a very hostile takeover with our arch rival, and in the transaction, we were taken off the table. The white knight was secured, and the surviving company then ended up acquiring Home and the arch rival, and essentially we consolidated the entire savings and loan industry in one firm. We decided to stay and consolidate all the acquisitions and square them through the Y2K event following this. However, the Global Allocation Group decided that they would leave and join me at SIA and continue what we really intended to work towards when we were going to buy the company. Ironically, WAMU, as it was later called, Washington Mutual, who was the acquiring white knight, became our first client. Another revelation occurred that was significant, and that is that the mutual fund business model has served the industry very successfully and very well for, the better part of a half, 3/4 of a century. It became clear to me, however, that with the technology improvements, the mutual fund model became obsolete, and it was time to go back to the old days at Equitable in my beginning when we ran individual accounts. So we became convinced the SMA model was the model of the future. So we've wrapped all this together. That's what we build at SIA. And so we have active management of the overlay. And we have pursued the improvements along the line. And we blew up, obviously, the mutual fund model and replaced that with indexation. And that becomes a key component that drives that. With the technology improvements, there became very good productivity enhancements. And we believe now that we have gone through several market cycles, that after 15 years, we're ready to revalidate our presence in the retail marketplace with the SMA format, and coupled with the pioneering efforts that we have done on the quantitative side. We're ready to release this again with a whole lot of experience behind us, same team in place, same method of management. We are thrilled to be able to get to this point, and Pat's going to give you a little glimpse of the inside day-to-day thinking and parts of what he spends a lot of his time on.
Oh, thank you, Steve. I'm Pat Hook, and I'm involved in research and portfolio management for a company, Scott Investment Advisors. I started out as an analyst for Prudential Insurance Company, and later worked in building a mutual fund company from scratch for a major bank, and that's the bank that Steve referred to, Great Western Bank. So I worked with Steve on this project. That happened in 1988, and we've been together as a portfolio management team ever since. My primary area of expertise has always been economic analysis and forecasting, and this serves as the backbone of our asset allocation operation. I find this work to be absolutely fascinating and thrilling, as it causes me to keep on top of everything going on in our rapidly changing world. And I believe it's never been as important as it is today to make right predictions on the global environment, given the high degree of impact that even small global events can have on our markets here at home. Of course, we use our predictions as a major consideration in deciding how to allocate among the various asset classes to our portfolios, given their risk profiles. Besides this involvement, I also like to share some of our latest investment ideas and our understanding of the implications of global events through writing various commentaries. These can generally be found on the website either as a blog or else as a special report. In looking ahead to a likely continuation of the global malaise and deflationary pressures which our economy has also been affected, we see the current investment environment as quite challenging, but we also find it appealing, given opportunities we expect to find as the markets continue adjusting to ever-changing influences. Steve, I'll turn it back to you.
Well, we're pleased in the time remaining to submit SIA and the 6 SAM portfolios for your inspection and kick the tires. We've created these 6 portfolios that are very symmetrical in the engineering that went behind them, the statement of investment policies, the quantitative analysis that we do, and the objectives and the timelines that we manage towards. They start from low risk to high risk. They are very easy to examine. There is no doubt about what is the yield portfolio, which has the lowest risk and the lowest return, to the highest return and the highest risk being the global. And they're all, again, symmetrical. That is signifies kind of our logo, which is the efficient frontier, all symmetrically in descending order. Now, to validate that, you would expect the performance to look exactly the same during all the measurement periods, and that's exactly what it does, as you can witness when you take a further look. So we would like, again, to invite you to kick the tires. We'd like to do business with you. Please visit us either on the manager's portion of your website or us directly on ScottAdvisors.com. And we look forward to sharing ideas and helping grow your business in the future. Thank you for sharing this, your time.